Hi, Harry Dent here. While I'm waiting for the markets to decide what they want to do into early next week, because I do see a major correction off this rally coming, not new lows, I want to just step back and just take a look at this whole central bank thing. This thing that's never had happened in history, where the central banks basically say, we cannot have a recession at all costs. If we have to print unlimited amounts of money, unlimited amounts of bailouts. Now, this is going to look really, unbelievably stupid from a historical perspective. Our economy's had recessions all the time throughout history. When a doctor comes to me and says, oh, Harry, I think we might be, we're looking at time, conquering the common cold. I'm like, oh, I think I need a new doctor. What the hell's wrong with you? Hey, I want you to prevent me from getting the coronavirus or the flu or cancer, something that attacks me and wants to hurt my system. Common cold is an internal way of your body cleaning out your system when you get too much in stress or too toxic or whatever, or too cold from going out without a coat, whatever. So recessions are like that for our economy. We grow and great things happen, but mistakes are made and bad loans are made and people go into the wrong businesses, and we flush that out to keep focus on the things that are working, get rid of unproductive debts, and move on. It's a healthy thing. So how stupid is this to say we cannot have a recession no matter what? This is idiocy. So, what happens when you don't do this? Okay, first of all, let's remember that starting with Greenspan and the first 40% crash, something we never saw in the previous boom from 42 to 68, a spring boom, not a bubble boom. But, he started off, any sign of weakness in the stock market, the economy, just lower interest rates and stimulate. And that sets up a bubble that would have happened anyway in the fall bubble boom season. Okay, so we started this thing. The bubble built into the tech bubble and then crashed. And then the 2007 finale bubble when the baby boomers were peaking. All things we predicted would happen. And then the real crash started. And it looked like the Great Depression. Not just major banks and financial institutions like Lehman Brothers, but AIG and General Motors going under. And the central banks just got scared to death and said, okay, that's when they got on this, hey, not just we'll always stimulate, but no, we will do anything. Mario Draghi and the ECB was the first one to say basically unlimited stimulus in 2011, that crisis. Then Japan went off the reservation, pretty much unlimited money printing in 2012 and 13. And that's when gold dropped because inflation kept going down despite that. So we're in this new era. The reason we're in it is that central banks allowed a bubble to get so far out of control in the first place. That's the only reason that we can't have a recession no matter what. Because yes, this whole thing will come down. We will have a Great Depression. Anyway, we would have had one in this winter season, but it will be like 29 to 32 with such bubbles and debt. And now financial assets bigger than ever. So again, here's what's happening here. Just to summarize, with this unlimited money printing, and again, it's quantitative easing. It's not just lowering rates. It's not banks lending money at 10 to 1 to expand money supply through productive loans, hopefully, that get paid back and you grow. No, this is money not going to banks, not going to consumers, and it's going straight into buying financial assets, primarily treasury bonds and asset-backed securities of the government, but of course now junk bonds, and Japan's been buying stocks and everything else. It's injecting money into the financial asset pool, good old stocks, bonds, real estate investment trusts, real estate, and this sort of stuff. More money coming into a fixed asset pool pushes prices up. Money buying bonds pushes not just short-term rates, which can be declared, pushes long-term rates, risk-free rates down to zero, and then at different risk premiums for corporate bonds or junk bonds or mortgage loans or whatever, a little bit higher depending on the risk, but still 2-3 percentage points lower than it would be. Lower rates means more borrowing. Lower rates means everything's worth more. The stock market's worth more, discounting future earnings at a lower risk-free rate. Real estate is worth more when people can buy much more on the same mortgage loan payment, on and on and on. So assets get bubbly, incredibly overvalued. But it's more than that. People borrow more. People buy bigger and more houses than they would. And so there's overcapacity. Companies in this bubble boom bought more capacity than they needed, because things are cheap and things are growing faster than they should. That's another impact. If all this is happening, the economy is growing faster than it would naturally. But the most important thing, speculation. When bubbles get going like this, and when everybody thinks the Fed's got your back and won't let you have a recession, won't let there be a slowdown, they feel less risk. So people just buy stocks without abandon. Traders not only do that, they leverage up at near zero short-term borrowing cost and buy 10 times that much. So do financial institutions. And the worst, corporations are borrowing money cheap or using excess cash flow from an economy better than it should be to buy their own stocks and leverage their earnings per share and their stock prices. Unbelievable. So you get incredible speculation. Speculation is not productive investment. Taking money from banks, having to pay that back and invest productively to make a good return, that's the type of thing that creates sustainable long-term growth. So you get this perverted economy of over-speculation, excess capacity and everything, corporate capacity, real estate for everybody, all this sort of stuff. And all this excess prices and assets, all this excess capacity in industry and real estate and government infrastructures creates a deflationary spiral. These prices have to come back down to normal. Debts have to be written off for the economy to ever be healthy again. So that's what we're dealing with here. We're in this mess because they allowed a bubble that would have naturally occurred anyway in the fall bubble boom season with the strongest of technology and demographic trends and falling inflation for the entire season and interest rates. They let it get even more out of hand, and now this is something we can't let fail. It has to fail, because here's what do we end up with? What I call a coma economy, an economy with overcapacity, a lot of zombie loans and companies that shouldn't exist, a lot of people working in industries that shouldn't exist, because all of this stimulus prevents the economy from changing, evolving, growing in the new direction, because people would rather not change if they didn't have to. And you got a coma economy kept alive only what? On life support. That's quantitative easing. Constantly printing more money, infinitely more, exponentially more money to stop the next downturn because the bubbles and the debt go up exponentially. That's where we're at. And yes, this thing will come down when this blows, and it will be at least as bad as the Great Depression. And we will see very high unemployment, which we're already in. So again, you can't stop you can't stop Mother Nature. You can't stop natural evolution. You can't grow artificially forever. What it shows is that economists do not understand the most fundamental thing that creates growth in everything. For the universe and all that is dark and light, that sort of stuff, okay? Dark energy and light energy, all this sort of stuff. For the economy, it's booms and busts. It's inflation and deflation. It's the play of opposites, that causes challenge and nurturing that allows us to grow and test. And the whole free market system grows on taking risks, and then there's successes that get rewarded and failures that get punished. We have to flush out failures. You have to flush out bad debts, or you take them into the future and it weighs you down and you get a coma economy. To summarize here, Japan, 30 years. Does anybody need more evidence than 30 years of an economy that's pretty much been zero growth and inflation, and then required massive stimulus more than any other country, and has, by Dr. Lacey Hunt's great indicator, money velocity, the lowest money velocity in the world at 0.40 versus 2 to 3 times that in other countries. So that's where we're at. This is insanity. Doing the same thing over and over again, expecting a different result. Japan started this bubble crash because their baby boom came first. Everybody else has followed, and we're doing the same thing Japan's done, and we're upping the ante, and we just printed more in the last several months than we printed, the Federal Reserve in the U.S., in the entire 2009 to 2019 bubble boom generated only by that stimulus. This is where we're at. This will only end badly, and these economists and central banks will look like the biggest freaking idiots in all of economic history. And you know what? The good side of that? Bitcoin and cryptos eat your heart out. These central banks may disappear other than short-term emergency liquidity and no longer be trying to overrun, overstimulate our economy, which is cheating and just plain bad economics.